The supporting material that you have can make or break a tax bill for you. Here's a case study that we see quite often, and I'm going to talk about what type of supporting material you should have on file and what supporting material you want to make sure that you never have on file. So here's a real case study. Say you are a physician or an IT consultant or a self-employed contractor of some sort, and you have a very high income, and your spouse also works. Let's name her Sally, and she's an executive assistant and she earns, say, $50,000. What you want to do is you end up allocating $25,000 of salary towards her to do your books and your invoicing. CRA knocks on your door and they say, prove to us that Sally has actually worked in the business and that you're not just income splitting and trying to avoid tax from the higher income earner down to the lower income earner. This is some of the material that you do not want to have on file. Keep in mind, CRA is very powerful and they are entitled to any sources of information from any party whatsoever upon request. Okay, so what you do not want to make sure you have on file is an email going to your accountant saying, I pay too much tax, I want to give some income to Sally so I can screw CRA. Don't keep that kind of stuff on file. Your accountant responds to you with an email saying, we can allocate a reasonable amount of income to Sally, and even though she's not working in the business, you shouldn't be red flagged if we keep the amount low. Right there, clearly said, she's not working in the business, you're not doing the right thing. Some other examples. Let's say you have a full-time person working at your business who does your books and your invoicing. Why are you paying Sally, your spouse? Another example of what many people do is they will post a job posting on LinkedIn. I'm looking for somebody to do my books and my invoicing. If that material's out there that you're trying to hire somebody, but you've actually already hired your spouse, that does not make sense to CRA and they're going to slam you with a tax bill. I love this one. We're at the corporate year end and the spouse is super busy. They're wrapping up their books. They're trying to wrap up all their work in progress that they have. The other spouse flies off to Palm Springs for a month because the other spouse is busy. They post all over social media that they're in Palm Springs during the busiest time of the business year. There's absolutely no reason why the person doing QuickBooks and invoicing should be on a holiday at the busiest time of the year. And this happens all the time, and CRA is looking for all of these facts. Okay, some of the material that you want to have on file. An email going to your accountant that says, I need to hire someone to help with my books and my invoicing, and I'm thinking of hiring Sally. What is the best way to pay her an income? That is legit, that's honest, that's you doing it. Also paying Sally a marketable income. You can't pay her 75 grand if the market's only paying 25 for a part-time bookkeeper. If you do that, CRA is going to flag you and say, that is not reasonable. Sally has another full-time job and you're paying her 75 grand? Paying her a reasonable salary is very legit. As well, having a contract with Sally in the business. If she's technically employed by the business, she should have a contract. So that's some examples of what you should not do and what you should do. If you're doing what you should not do, you're probably being fraudulent and not following what the CRA guidelines are.